We'd like to page Mr. Abdul Karim. Please go to the stage. Mr. Abdul Karim, please go to the stage. Thank you. request everyone to head on back to the reception hall. We will be starting in a few minutes. May we request everyone to head on to the reception hall. We're going to start in a few minutes. Thank you. prospecting clients. Ladies and gentlemen, please welcome Dr. Sipho Moyo.
Good afternoon, everyone. Hope you've had a good break. I'm going to introduce and call on stage now the really distinguished panel that's going to talk about, we're going to be focusing on the Maya Declaration, and I'm going to call the speakers up to the stage with a brief introduction of who they are, and I think this is going to be an exciting session this afternoon. So let me start with my first panelist. Let me start with my first panelist, Sung Ali, who is the Director for Strategy and Network Development at the Alliance for Financial Inclusion in Thailand. And I'll speak a little bit more about her just before she speaks. Let me also call to the platform Dr. Suran, who is Chief General Manager, National Bank for Agriculture and Rural Development, NABARD, in India. And last but not least, let me call to the stage Bernadette Tayag, who is Head Inclusive Finance Advocacy at the Central Bank of the Philippines. You can sit anywhere. Just is he here? I'm so sorry. One more person whom I wasn't aware had arrived is Abdul Karim, and just make sure I introduce him properly as well. Abdul Karim is Managing Director at Kalikama Sabayak Foundation, PKSF, in Bangladesh. Thank you, Abdul Karim. Okay, so this is our distinguished panel, ladies and gentlemen, and the focus of this discussion really is going to be on progress with the Maya Declaration, and I think for all of them we're going to get a sense of what the countries are doing in order to advance the Maya Declaration, which, as many of you know, is really the first of its kind in terms of commitments that were made by developing and emerging countries to fast track or to make progress with financial inclusion. So we're going to hear from each of these distinguished panelists what their countries are doing in that respect, and you know, how they're making progress. And I think what is unique about the Maya Declaration is that it's very much based on self-determination. In other words, the countries measure themselves based on their very specific circumstances and the conditions in those countries. It's also sort of a peer review system, which is very good. It takes advantage of technological advancement, but it also requires political will. And so I think we're all very excited to hear what each of these speakers is going to tell us about the progress that's being made. And then later on we can ask more questions so we can get a better sense of the actual progress that's happening in each of those countries. So let me start with you, Sunali, on my left. Please.
Thank you, Sipho. Can I actually have my slides on?
Sorry, there's a slide.
So, thanks for the introduction, and before I start, I also would like to express my great appreciation and thanks to Microcredit Summit for inviting Alliance for Financial Inclusion to this prestigious forum, and also to present what the API network is doing and how the policies are emerging to this audience. So let me just show you my first slide, and actually Roger in the previous session already showed the same slide, so I actually don't need to go through this, but this is basically the same slides from the global index data, and I just want to reiterate again like why we are here. And there are still 2.5 billion people do not have access to financial services, and this is what we are going to overcome. So just want to mention that we have a huge task ahead of us. If we go to the next slide, it shows, but why does it even matter? Why is financial inclusion so important? And before, we kind of relied on educated assumptions that having access to financial services will have impact to the lives of the poor. We also had a lot of anecdotal stories that a mother getting access to financial services, sending their kids to schools, families opening up their own business. But now, thanks to a lot of studies and research, we actually have empirical data and evidence how financial inclusion actually contributes to poverty reduction and growth. So the first quick example is a result from a study in Nepal, and it showed that having access to savings account increased 16% increase in the household assets. The second example we also see is in Mexico. In Mexico, opening of bank branches targeted to low-income group, it actually contributed to 7% of increase increase of an informal business sector. There are also other empirical evidence, and I think also Roger mentioned some of them. In Kenya, there was a study, and increase in a savings account actually had a great contribution in poor households, increased spending in preventive health care. So these examples now give us a very good data and evidence-based to see how important financial inclusion is. And now we see, because this panel is about policies and the role of the policymakers, why is then policy important? And our next slide, so what's the role of the policy making? And I think there is no doubt that policies create enabling environment for all the actors relevant for providing financial services to provide increased access to poor people. But there are also other important elements that the policy making for the different sectors to go into the right direction in providing access and use confidence to the people in the market that they can use the financial services. It gives confidence to the business sector that nothing much is going to change, or the market or the business model has to dramatically change because of the different regulations or the policy environment. Another important role of policy making in financial inclusion is that policies ensures that the impact of financial inclusion goes into a positive direction, and we can optimize the impact of financial inclusion without risking other parts of financial sectors, such as stability and integrity, which in the end all contributes to the growth and stability of the country. So these are some elements why financial inclusion policy making is also important in the overall landscape of financial inclusion. I have some examples, and this actually photo shows the agent banking in Brazil. In Brazil, in 1999, the central bank allowed a correspondent banking services. And in 2013, the study showed that 45 additional people, new people, had access to, for the first time to financial services through these banking agents. Another example, in Malaysia, the central bank had a conscious policy-making decision to expand the banking branches. And this policy has an impact in increase of a number of loan accounts for 176% in the last 10 years. So these are some of the direct impact that you can see policy making can make in terms of financial inclusion. But I'm sure there are much more examples, and actually we have the experts here who will talk more about the policy making and how it impacted the financial inclusion in different countries. This showed the importance of policy making, and this awareness of the importance really grew in the past 5 years. So if we look at the next slide, actually I had this quicker than I wasn't sure, sorry. So if we look at the next slide, this is just one indication how policy making is emerging in the field of financial inclusion. Sipho just introduced me from Alliance for Financial Inclusion. I don't know whether everyone knows about AFI. Alliance for Financial Inclusion is a network of policymakers and regulators from developing and emerging countries to share, develop, and implement financial inclusion policies that work, that encourages business, private sector, NGOs, and consumers to have better quality access to financial services. AFI started in 2008, and during the past 5 years, 108 institutions from 89 countries officially joined the network. This itself shows the increased awareness of the importance of policymaking in financial inclusion. The network is also working on 7 specific topical areas and established a working group such as mobile financial services, SME finance, consumer protection and literacy, and so on. And AFI, actually the overall AFI members, I think represent around 86% of the unbanked population, which actually shows that many of the unbanked population is living in developing and emerging countries. And this is another indication of how financial inclusion policy making is actually entering into the mainstream policy discussion. In September in Kuala Lumpur, AFI had its 5th annual Global Policy Forum, and in one of the plenary sessions, we have asked the audience, who was actually representing 78 countries and 313 policymakers, who mostly comes from central banks and Ministry of Finance and some main regulatory bodies like Superintendencia. We asked them whether financial inclusion now has entered into the official mandate of central banks and Ministry of Finance. And it was quite positive to see that 49% of the AFI member institutions have responded that financial inclusion became their official mandate, together with the central bank mandate of stability and integrity. Another 46% has mentioned it's not yet an official mandate, but it's an official objective that as a policymaker has to achieve. And there was a very small amount of AFI members mentioned it is not yet an official mandate or objective. If we had asked this same question 5 or 10 years ago, I'm sure the picture must have been completely different. This is a new trend in the policymaking sphere, that financial inclusion became such an important priority for also policymakers. Now, Sipho talked about the Maya Declaration, and this is maybe the third indicator, but also a very important movement of policymakers taking forward financial inclusion. Maya Declaration was established in Mexico, Riviera Maya, and that's why the name is Maya Declaration, in 2011. It was a joint declaration of the members of the AFI network that they will take financial inclusion forward through a better policy making, share information and knowledge on financial inclusion, and also measure financial inclusion policies. financial inclusion impacts through the Central Bank and AFI members initiative. I think it started with 17 countries making a concrete commitment, and up to now we have 45 AFI member institutions from 45 countries made concrete commitments on Maya Declaration. And Maya Declaration is not just one-off commitment. It's not a statement you would say and then you will forget the next year. Maya Declaration is a process, it's a framework. Once you make your commitment, you implement it, you share with the others, you also get peer review, but there's also peer pressure if you don't achieve your commitments. And also after you achieve your commitment, you measure it and you learn what you have learned throughout the implementation. And sometimes you can renew your commitment for a higher goal. And I saw just now Larry mentioned that many of you are also going to make commitments through this summit. We really welcome this initiative, and it's really great to see that we are all making these commitments. Examples, lessons learned from AFI in the Maya Declaration process, it has to be very concrete so that you can measure it. The thing you can measure, you can control. The thing you cannot measure, very difficult to achieve, and you won't even know that whether you have achieved your commitments. And also, making a commitment public really helps. It increases your accountability, it increases to share, it increases to show that we are going through the same goal. So I'm really looking forward for more commitments also coming from this summit. Going back to the Maya Declaration, one of the key things, and I think Sipho also mentioned it, is Maya Declaration, of course, is a joint declaration, but each country has to set its own target and its own goal. It very much recognizes that countries have different contexts and different priority, and there is no one solution that can cover all the different contexts of the different AFI member countries. So each AFI member set their own goal and target, and they're measuring it through the Maya Declaration. And I just wanted to show you, even though everyone had their own commitment, there were some trends coming out in the Maya Declaration. And you can see in the graph, there were many countries or policy-making institutions making commitment on financial literacy and consumer protection as one of their key priority in moving financial inclusion forward, together with the quality aspect of financial inclusion. There was also a strong commitment on developing national strategy, which shows that financial inclusion is not a policy that has to be done in the silo. On the side, that's something good to have, but it's actually in the core of policy making that has to be coordinated with many other financial sector policies and also with many other partners. So national strategies involves a lot of coordination, partnerships, and also setting the right objectives. There's two other trends that we can see, which is data and measurement and digital financial services. It's a very good sign for us that many of our member countries are committing on data and measurement. This is the way for evidence-based policy making, and also it gives us the learning. And this was a very good opportunity to see that in KL, many more of the AFI member institutions agreed on even using a core indicator, a set of common indicators, so later they can benchmark on the achievement moving forward. Maya Declaration, in total 45 commitments, represent 800 million unbanked people, and also 19 of these made a very concrete, quantifiable target to measure their progress forward. Of course, there were other areas that many of the members committed, such as agent banking, microfinance and microsavings, and financial identity. This is my last slide, and we can see from this big awareness and also the importance of policy and an emerging trend that we saw the challenge 2.5 billion, but we also have a great opportunity forward. There's a lot of interest aligning together from different partners, and we actually heard that from the session before. There is a great technological innovation that can make things fast and very in low cost. There's a global advocacy and country-led approaches that not only aligns but sometimes review the international standards and see whether we can accommodate financial inclusion policies better. And finally, there is more focus on measurability, quality, and data so that we can learn from each other and take it forward. And in all this, I just mentioned my declaration is a commitment from policy-making institutions. However, it cannot be achieved without partners and supporters and others. So hopefully we will see a lot of collaboration coming out under this commitment. So thank you so much, and I give it back to Sipho. Thanks so much.
Let's give Suran a round of applause. Thank you, that was very interesting. I think we're running out of time, so I'll ask maybe one question. Why do we need policy interventions and regulatory frameworks? Why is microfinance not left to market forces?
I think we have learned a number of things in the past. Of course, market is very important, and there is actually a bigger part that the market would do. But policy actually provides, in a way, a security and confidence in that market. And we have seen in some of the countries that microfinance flourished after they have put a tiered regulation to show how microfinance can actually act in the country. And then the microfinance actors, with the confidence and security of their business, could act better. There's also another part that we have learned in some of the microcredit crisis, that over-indebtedness and some of the risks that we can see could also be prevented through better policies and regulations. And I think there are other aspects that we can see, but perhaps other policymakers can answer better this question.
Thank you, Sonia. Maybe just one quick question. Which African countries are making progress with the Maya Declaration?
In Maya Declaration, we have 16 African countries currently made commitment. It's the continent that has most number of commitment. I have to say many of them actually progressed a lot. We have actually a report that I have left it out there, and you will find it outside if you're interested. Tanzania, Nigeria, Rwanda, Burundi, Kenya, and I can actually name more who actually reported back their progress.
Okay, brilliant. Well, we'll give Suran another round of applause, please. And I just want to say we will have an opportunity to ask questions from the floor after everyone has made their presentation. So let me call on Dr. Suran, the Chief General Manager at NABARD, to please make your presentation.
Good evening, everybody. Chair, co-panelists, dignitaries of the dais, friends. I thought I need to put the context in place because anything that you talk about India is too big, the numbers are too large. Sometimes when it's too small, it's never visible in India, though they do great work. The endeavors in inclusive banking in India perhaps dates. I'm sorry, I'm not using a PPT. Maybe you could see the visuals too if there are few. It dates back, I would say, more than a century. The cooperative banks were the oldest, close to 115 years. You had specialized institutions which were again focused at rural hinterlands, regionally located, rurally biased, held by government, which we call as Grameen banks in India, but it's not Professor Yunus Grameen banks. We call them as regional rural banks. In Hindi, it's called as Grameen banks. Even in the private sector, we had local area banks, which was again localized, in a contiguous 3-4 districts. We have private sector banks, commercial banks, a whole lot of them. Despite that, with so many years of inclusive banking, we also had, social banking started moving away from class banking to mass banking. directed lending, a whole lot of things. But despite that, if you look at the latest central bank's report, it talks about 59% of our population having some form of access. That means if you were to talk about exclusion, 41% is still left out of the banking sector. The Findex, I think everyone has been referring about Findex, and if Findex is to be quoted, it talks about 35% of adults having bank accounts in India. And about 8% of them availing that in a year. Okay, demand needs to fructify. There are many other factors which comes into play. You have 2% or 4% which use that for payment systems. So the numbers are extremely low percentage of population which is using that. It shows that we still have a huge challenge, a huge task, a huge work to be done. As a national agenda, there has been a tremendous realization of the importance of financial inclusion in India. In fact, many believe that even to push up the struggling GDPs at around 5 to 6%, financial inclusion can play a role. And most of the discourses within the country talks about those factors. So the point that I'm saying, there's a greater recognition of many institutions. I forgot to mention MFIs and MFOs. We call them MFOs, which are not-for-profit organizations, large number of them working together. So all these institutions, I think, together, form the supply side. We've been looking at the supply side much more intensely. About 20 years back, NABARD actually piloted a self-help group bank linkage program, these are informal groups, because directly they were not bankable, banks were not interested, but collectively as a group, we thought we should energize the demand system. In fact, it was one of the initial interventions of trying to prepare clients for the banking system in the future, as individuals. Initially, they bank jointly, but over a period of time, they become individual clients with some asset base. They can pledge the collaterals, or they can give the collaterals as a security and access all kinds of financial services. 20 years, when we look at the numbers, they're pretty attractive, but all is not hunky-dory. We have 7.3 million self-help groups which are linked to the banking system. The SHGs actually are save first, take credit later when they get prepared for it. And they save an interloan with their money. So 7.3 with an average SHG size of 13 women. It's predominantly women. 86% of them are women borrowers. We've been talking about women in the morning. Are they good repairs and so on and so forth. So 86% of them are women. So if you do a simple multiplication, we are talking about 7.3 into 13, we are talking about 95 million households which are part of the self-help group program. In terms of saving, I think morning there was a mention about how much they have saved. It's more than $1 billion. We tend to use our figures in crores. Crore is nothing but 10 million. So they have substantial amount of saving. It's about 1,300 million US dollars, which is the saving balances of poor retained in the bank. Because the saving in SHG is basically used up by the members to interloan among themselves, because they learn the nuances of credit using their money. So there is a small degree of financial literacy that happens. What is credit? What is terms of credit? Who would take credit first? Which we teach otherwise through financial literacy program, actually is embedded in a self-help group. And in a society of ours, which is very massive, patriarchal, socially very stratified, you need to have some kind of social inclusion, and SHG enables that social inclusion and a peer education process. Irrespective of caste, creed, you find them across religions actually forming groups. Sometimes social structures are so prevalent and extremely dogmatic. In certain regions, they actually form within the society. But over a period of time, it does a bit of churning. So there is a degree of financial literacy which is happening up front. There's a degree of social inclusion which happens up front before financial inclusion in its true sense of taking it from a bank. If I was to spell out a few numbers, I would say we have around 4.4 of these SHGs, a million of these SHGs, which take bank credit. That means somebody has seen these groups, seen their functioning, they are satisfied with it, and a banker has actually lent. The outstanding credit is close to around 6,000 US million dollars. So it's a huge figure that we have. There is, as I was mentioning, there are many attractive things that happens within an SCG. But despite all that, it doesn't get recognition as a financial inclusion initiative of Government of India and Reserve Bank. I was keen in asking the Central Bank of Philippines as to what they have done to perhaps try and include in their social inclusion endeavors as to how do I convince my central bank, the Reserve Bank, as to why these figures are not. Those of you who are aware, India, there is a huge country and there is space for hundreds of players to come and play and all kinds of innovations and interventions. Government is primarily now faced at looking at DBT, which we call as direct benefit transfer. We were talking about cash transfers in the morning. They are much more interested in getting that because the leakages, the cost of actually, the delivery in other means has been a challenge. So digitizing members' accounts, getting the unique identification number, which is now 400 million of our population is actually with the Aadhaar card, which is unique identity card, identity numbers, seeding Aadhaar and bank accounts. So there's a huge process that is involved. The Ministry of Rural Development, which is another ministry which we are engaged with, has a massive program which is known as NRLM, National Rural Livelihood Mission, which actually works on the SHG platform to build livelihoods, right from gaining access to financial services from formal institutions and then building on livelihoods. The L part is not very clear in what the government has given, but it's still there. So the first thing is create a platform, the social mobilization work and so on. The other financial inclusion initiative, which is always all the publications of the Government of India as well as the Reserve Bank, the Central Bank of the country, talks about financial inclusion in a different way. It's about, we have something like 6 lakh villages, 600,000 villages. Many of these villages, almost 4 lakh or close to 5 lakh, doesn't have bank branches because most of the branches are concentrated in semi-urban, peri-urban areas and metros and so on and so forth. So the first task under the financial inclusion plan, which the Government of India has rolled out, the 3-year financial inclusion plan, every bank has to prepare a financial inclusion plan. And the major task is building the institutional architecture. So they have, in the last 3 years, they have opened up another 7,000 branches. And more than that, BC agents, business correspondent agents. They have enlisted almost close to 200,000, 1,87,000 to be precise, 187,000, sorry. I think we are so used to lakhs. That's a figure which spots out. So there's a huge number of BC outlets which is opened in villages. I think their focus has been on villages with population more than 2,000. So building the institutional architecture and opening basic accounts. We had earlier in our organization, in our country, what we call as no-frill accounts. They're just basic bank accounts. Other bank accounts, they prescribe minimum balances and so on and so forth. But this is a very simple account. You can open a bank account with a 0 balance. So they have opened about 110 million bank accounts this way. But our challenge in NABARD has been trying to convince the central bank, and I'm sure I will use the peers in the panel today to convince my central bank as to why SHGs also should find a place in the financial inclusion numbers. It will be much more attractive. It's not merely about having huge numbers. It's about preparing clients to get financially included. The government also has opened up, through the banking system, opened up about 700 financial literacy centers. The regulatory compliance is there, but their effectiveness is something, a small question mark. Every district, virtually every district has a financial literacy and a credit counseling center. I'm not sure how many how many of them actually move into this and use that services. Self-help group in rural hinterlands has been a challenge, and the entire program has been skewed towards the south. The entire program, basically because the state governments have also played a massive role in embracing this program and building and enabling social mobilization. Our key challenge has been to look at about 150 districts. We have many districts, about 80 districts of ours. In the Central Belt, which is extremely poor, we call them as tribal belts, the societies of the lower rungs of the social ladder. And they are also what we call as left-wing extremism affected. These are conflict-ridden areas. So our focus has been on social mobilization in these 150 districts, which forms virtually close to 1/4 of the districts that we have in this country. By using NGOs as anchor institutions and remaining there as business facilitators for these communities on a long term, not just promote groups and leave them in the lurch for a 3-year period, but continue to handhold them, build livelihoods, look at other things, other issues. Mere access to finance, what our studies have thrown up, access to financial services, we've seen that there is an incremental income. So the SNG actually enables income stabilization first in the community by accessing that, and then the income enhancement process. That's a gradual phase that we've seen. And we believe that there is a whole lot of task of, if the markets are missing, if the skill is missing, to try and address that. So effective financial inclusion should be about quality of life. I think we discussed that in the earlier sessions. So if we have to build on that, there are a number of other plugins which needs to come in. And this is what we expect the anchor institutions to get prepared over a period of time to address those 150 districts out of the 600 districts that we have in India, to build on self-help groups and others. I personally cannot touch on what microfinance institutions do. There are a whole lot of other things. Even banks provide small loans, massive numbers. If I have to take, $1,000 as a unit, there are a large number of banking loans which goes to what we call as Kisan credit cards, just farmer credit cards which we give, general credit cards, massive number of other initiatives that is happening. But collectively, whatever financial inclusion endeavors are there, I believe that whichever is the central bank or the government needs to embrace all kinds of systems and even find complementarity between these two. Financial inclusion through a BC outlet can work in tandem with the SNG, because even SNGs are actually throwing up leaders, community leaders. If you embed community resource persons, they can be the BC agents in those villages, rather than a technology-enabled person bringing a business correspondent. It will be better to build within communities such leaders who provide these financial. So there is a tremendous amount of scope, and we are certainly hopeful that in the 2 to 3 years that comes, that we try and converge all these initiatives to build and improve lives of the millions of poor, the Millennium Development Goal, and a whole lot of other declarations that you have. India can provide them, and we are well on the path to that. Thank you.
Fantastic. Thank you, Dr. Suran. So it sounds like what you're doing, with NABARD is very transformational in a sense. I mean, you talked about the social inclusion, the financial literacy, and so on. Why then is it difficult to convince the central bank to formalize this or to consider it as part of the type of financial inclusion we're talking about? What do you need to do to convince the central bank?
That's a tough one for me. I've failed in that job so far. As you rightly said, it's not merely a transactional initiative. It is a transformational initiative. But right now the priority has been, there are a large number of social security schemes, huge scholarship, pension schemes, which government channels massive amounts. Their job has been to electronically transfer this to bank accounts. I was the other day reading about, cash itself can be a development tool if you can reach cash to people. I'm not sure whether the central bank feels that's the best initiative to do. But we would try to continue to, we've already started some pilots of using self-help group member leaders to work as business correspondents for the banks. And it is working well. And if these pilots are done in more number of areas, we have a concept of, ultra small branches in small villages. These ultra small branches could be run by SNG leaders over a period of time. So once we do these pilots, perhaps even our, anything which we try to document as a pilot post the experiment, perhaps the central bank would be much more convinced this work. But I'm keeping my fingers crossed.
Thank you, Dr. Suran. We'll save the more questions for later. And because we're running out of time, Bernadette, can I ask you to tell us about what's happening in the Philippines, and particularly the advocacy work. The advocacy aspect of it should be very interesting in order for us to be able to really move the financial inclusion agenda forward.
Okay, thank you. First of all, thank you for inviting the Bangko Sentral ng Pilipinas to this session called Building an Ecosystem for Financial Inclusion. We use the word ecosystem all the time, but I deem to look it up for this session for its literal and actual definition. It means a network of interaction among and between organisms and their environment, functioning as an ecological unit. I think that definition is very appropriate for what we are trying to do here at the Microcredit Summit. Indeed, it is the interaction and the partnerships that we develop with each other here in the backdrop of our environment in trying to attain our common goal as one unit, which is that of addressing problems of poverty. The BSP's role, I would say, is on the environment part. To develop the enabling environment that will allow solutions to be developed to increase financial inclusion and to improve overall quality of life. But before I start, maybe I can just provide some country context. For those who are first-timers in the Philippines, this is the 7,100 islands of the Philippines. It's color-coded of blue and gray, and I would like to highlight the gray portions of the map. Those are the areas in the country that have no banking office whatsoever. That's 37% of our total municipalities, and 15% of our population live in those municipalities. I'd like to point out the square on the bottom right. And it may be a little hard to read, but what it shows is that the concentration of banking services are really in the urban areas. 100% penetration in the National Capital Region, where we all are today, and just a 7% penetration in the autonomous region of Muslim Mindanao, which is on the southern part of the country. Aside from the challenge of not having enough access points, I'd like to discuss some of the usage challenges. Many of us have already referred to the Findex. These drawings are actually just culled also from the Findex. 26% of the adult population have bank accounts, and only 10.5 have used a formal financial system to take out credit in the last year. Insurance penetration is much lower at 1.1%. As compared to the GDP, and also limited usage of payments services, which was explained earlier as a very important service that is required, and sometimes even a first step towards financial inclusion. So in light of this very daunting challenge, the Bangko Sentral ng Pilipinas has endeavored to really pursue the objective of attaining financial inclusion, and we define this as having effective access to financial services for all. Professor Yunus mentioned no one is to be excluded. And when we say for all, it does not mean we want everyone to have credit or microcredit. It is just that all the types of financial service that they may need, it may be just a savings account or a means to send and receive money. But whatever they need, that they can have access to it. And we believe this is an important objective because, as Sona pointed out, with the empirical evidence that she showed us in her first slide, access to financial services does have a positive impact in the household level. It empowers households to manage their resources and take advantage of opportunities and to improve the quality of their lives. In a macro perspective, we believe that if your financial system is able to mobilize broad-based savings and then invest those in productive sectors that can catalyze growth, then financial inclusion can contribute. Is not the only contributor, but can contribute to inclusive growth, to financial stability, and actually financial resiliency. And so we have taken this very seriously and have developed an internal strategy wherein we look at 4 key areas. Policy, where we think we can do most work. Policy, regulation, and supervision. Consumer protection and financial education. We believe that as we enable the environment to bring in more people in the financial system, then there is more vulnerable individuals that are now entering the financial system for the first time. They need to be adequately informed, adequately protected, and well educated. So we also take very seriously our consumer protection and financial education work. There is advocacy work, and as Sona mentioned, data measurement and management is something we also take very seriously. We want to know what actual progress are we making? Are we going the right direction? Is there any more interventions that we need to do down the road? And just to give you evidence to show you how seriously we are taking this, we've established an inclusive finance steering committee in the Central Bank that is headed by no less than our governor. And it is a very high-level committee with membership only of deputy governors and managing directors. And there are working groups that are tasked for each of these 4 areas. And actually, to show you how committed they are, we have actually the managing directors that chair these working groups in the audience today. We have Managing Director Lopez D in charge of the advocacy, and Managing Director Fonasher, who is also there at the back, in charge of policy, regulation, and supervision. I would like just to call out the policy, regulation, and supervision initiatives as an example of what tangible things we have done. I've classified some of our policies in 4 areas. And these are regulations that we have put in place that have allowed our banking system to become more inclusive. The governor this morning said we've issued more than 40 regulations. And I would like to really say that these are very meaningful regulations that have allowed the banks to, number 1, offer a wider range of products and services that are really fit to the unserved and underserved market. You talked about the simple savings accounts or no-frills accounts. You also talked about the very small branches. We've allowed the banks to establish small branches that will allow them to reach out to areas which a bank would otherwise not set up business in, maybe too little people or very low economic activities. We also realized the limitations of brick-and-mortar branch structures. And so we have issued several regulations to enable the banks to expand their virtual reach through mobile devices, through electronic money. Our Minister of Budget, Secretary Ahmed, this morning mentioned that mobile penetration in this country is 114%, meaning more than 1 cell phone each, even if you go beyond 100%. The potential for that is limitless if we are able to build ecosystems wherein that mobile device could safely and soundly be a channel for receiving or sending money, which will ultimately lead to financial services. Also, we have issued regulations that lower customer onboarding. the barriers that are usually faced by individuals, such as ID requirements or documentary requirements, those have been liberalized to make it easier for the banks to open their doors to these unbanked or previously unbanked clients. And of course, at the end of the day, our focus is also to enhance our own internal capacity to make sure that we are able to supervise all these new developments that are rolling out in a sound and sustainable manner. At the end of the day, our responsibility to make sure that the system is safe and sound will also ensure that the products and the institutions that are delivering them are sustainable and viable. Okay, so this is the only slide with a lot of words. Larry said only pictures on the slide, so this is my only slide with words, because I want to say that we have a very clear vision for financial inclusion, and I won't go through them, but I would say the first two bullets are on products. We realize that this market need a wide range of products. We've gone beyond microcredit. We know that they need more services. They need to be appropriately designed, priced, and fit to the market. The next three bullets are about delivery channels. We're recognizing the potential use of technology, of partnerships between non-banks and banks, of the important role of telcos, the important role of remittance agents, and all other players that can develop this ecosystem that will make touch points to financial services more accessible to areas that need these financial services. And the last two are very serious ongoing focus of the central bank is on consumer protection and again developing our capacity to monitor, to collect the data, to make sure we are going the right direction. This is our vision, this is what we are committed to. And talking about commitments, I will segue into our own Maya commitment, which Song has already also discussed earlier. I think also linked to our theme of partnerships against poverty, the Maya Declaration platform is in itself a partnership, I would say, because we are making this commitment side by side our other regulators, our peers. So we are helping each other out in a way. AFI provides us a platform where we can do peer reviews, where we can expose some of our regulations and get very candid comments. So when we make out this institutional commitment, this is a commitment that was approved by our monetary board, we are also doing this in partnership with our other peers who also share our vision of full financial inclusion. So if you look here, I can just we have here very tangible commitments on pursuing financial inclusion side by side our more traditional role of promoting price and financial stability, coordinated initiatives with other financial regulators. As I said, our vision of financial inclusion does not just entail one model or one type of provider. It looks at the opportunity of a multi-channel, multi-type of institution that deliver these services, and coordination with our other peers and regulators is necessary. And this is in line with our work towards establishing a national strategy for financial inclusion. We've committed to price transparency and fair dealing with clients. We've already issued important initial regulations in this aspect. We've committed to create the environment to make it possible for all adults to have a deposit account. Quite a large commitment. We have also committed to massively expand touchpoints through innovative channels. And finally, to develop a financial inclusion data framework to enable us to measure our progress and help us craft evidence-based policies. So that ends my presentation. Thank you.
Thank you, Bernadette. Thank you very much. That was very interesting. I would like to hear a little bit more about the advocacy side of it. But, you know, to your own admission, financial inclusion is an important tool for moving poor people out of poverty. But it's not by any means the only, or even for that matter, the best means of moving poverty. So why is it important? I mean, just from your data, I can see that you use data, you have a very empirical approach by using, evidence-based, research. So why is it important for us to continue to push for it, even though it's not the only or for that matter the best means of moving people out of poverty? What does your evidence-based analysis tell us?
That's a very good question. The evidence that access to financial services provides you the tools that you need to manage your finances or to seize opportunities if you have a business, I think is common to all types of households and businesses, even if you are already banked or unbanked. And the statistics that showed us that there is not a lot of individuals or households without this access was really quite alarming for us. And that is the reason, as the supervisor of the banking system, we realized that we can do something to enable the banks that we supervise, if it is their business decision to do so, to serve these markets that are just waiting to be served. It's a win-win proposition, we think. If they're able to do it in a sound and viable manner, they are able to tap new markets. And it's a win-win situation for us as a policymaker when we see that these markets wanting financial services are finally tapped. And that is just one way, as I said, but it's an important first step. And this access to financial services coupled with opportunities of business, as we heard Professor Yunus earlier, it allows them to seize those opportunities. It allows them to, it gives them the means to take part in productive sectors, to join value chains. And we think it is not the only means, but an important one, and one where we can make the most impact as the supervisor of the financial system. So that is why we've taken on, at least our governor and our principals have taken on this role very seriously.
Fantastic. Thank you so much, Bernadette. So last but not least, I'll move to Dr. Abdul Karim, who is Managing Director at the PKS Foundation in Bangladesh. It would be good to hear what's happening in the space of financial inclusion and demand declaration in Bangladesh.
Thank you, Mr. Chair. In fact, we learned from the previous session that 77% of the poor people are unbanked. I think I am in a better position to give you some good news compared to my friend from India that we are doing a bit better in financial inclusion, rather trying to do a bit better. As I speak today, I speak from a country which is the birthplace of microcredit in the world, which is the birthplace of three major concepts in microfinance. Number one is the wholesale microcredit, like the organization I represent, Political Mushayak Foundation, PKSF. We extend money to the NGOs, MFIs, we call them partner organizations, about 250 of them. Bangladesh is the birthplace of microcredit, retails microcredit, like BRAC, Grameen Bank, Asha, etc. And Bangladesh is the birthplace of the regulatory authority in the world. We have got the MRA, Microcredit Regulatory Authority. So I think I'll feel a bit more comfortable if I go here. I will be a bit quite brief. Since today's topic is ecosystem for financial inclusion as well as protection of the clients, I'll speak a bit about both the topics. In fact, Bangladesh has got second highest access in South Asia. 80.4% is for Sri Lanka, and Bangladesh is 65%. Then why access to financial services? This has already been narrated by many participants. These are the figures you can see. These are the figures you can see. I'm not describing in details because of shortage of time. Do the extreme poor have access to? You see the percentage, and I think Bangladesh is in a better position about the access of extreme poor to microcredit services. Next is a comparison of access to MFIs in Bangladesh over 25 years. And in 1988, access to microcredit was 6.7%, which was 37.4% in 2009. Then comes access to savings account. The figures are there. Access to insurance, I have given the figures. Then who have least access, about the vulnerable households have limited access. Their expansion of financial inclusion. In fact, the banks are in urban or peri-urban areas, as was told by my Indian friend. It is MFIs that can reach the poor people, the vulnerable people. The ATM card is there, credit card is there. It is taking momentum very slowly in Bangladesh, but it's better in India. So, what are the key messages? As I told, Bangladesh has got second highest access in South Asia, and in fact, formal market is less efficient, but the microfinance market, so far as rural areas are concerned, and is good for the vulnerable households. What are the implications of these findings? In fact, we need some basic changes in our concept in order to deepen the microcredit services in the rural areas. We have to redefine and reshape the private banks to ensure more inclusion. Few words about the agricultural and rural credit policy and programs in Bangladesh. Our central bank, the Bangladesh Bank, is really concerned to ensure access to microcredit services by the poor people. They have given categorical instructions. These are figures for various years. Few words about the Microcredit Regulatory Authority. In fact, in order to conduct microcredit activities, it is essential to have license from NABARD, and they have other rules and regulations to protect the interest of the clients, who are the poor people. So what are the basic features of client protection? Because this is one of the topics of this discussion, and I have pointed out the rules of Microcredit Regulatory Authority, and these are that clients have the right to obtain loan if they are members of a group or of an MFI. They have got the right to ask for loan, and there is upper limit of savings, and the client has the right to withdraw savings. This is not done in many countries, and the client has the right to have formal evidence to all financial transactions. Right to claim benefits of insurance policies. Right to earn interest on the savings, and right to access to information about his savings, etc. There are few challenges of agricultural, rural finance and banking in Bangladesh. I have mentioned these are extremely important. Because of time shortage, I cannot elaborate. But it is important to know the evolution of the concept, as my friend was telling. the concept, in fact, started with the cooperative savings in our subcontinent. In 1904, the British started the village level credit cooperative system through various trial and error. The Grameen Bank, it was started as a project, and it is serving the entire world. It started from Bangladesh, and in fact, a few words about PKSF. As I was telling, it is the world's largest domestic microcredit financing and capacity building organization. Our strategy is to act as a second-tier organization, and we operate through the MFIs, which we call the partner organizations, and we finance on a continuous basis for institutional development of the POs also. And our activities, intensive monitoring, capacity building, has resulted that about 200 partner organizations, they have got 6,000 branches all over the country. We cover about 95% of the villages, and we have a loan portfolio of US $460 million with our partners MFIs, and they have got, our MFIs have got a loan portfolio of US $1.2 billion in the country, and we have a total number of 8.6 million clients all over the country. We call them partners, no longer clients, and about 50,000 staff are involved in Bangladesh in the microcredit MFIs or our partner organizations, and our loan recovery rate is 98.5%, and our partner organizations recovery rate is 99%, and the total microcredit portfolio is US $3.6 billion. So we have a number of challenges because the MFIs, they have got two types of goals in their front. They have to be sustainable and they have to serve the clients to alleviate poverty. So there has to be optimal trade-off between these double bottom line targets. And the problem of overlapping is there. There are, most of the time, almost every year, there is some sort of disaster in the country, either a flood or a cyclone, etc. And the MFIs working in those areas face serious trouble. And our monitoring and supervision from PKSF is intensive, but many of our MFIs have shortage of skilled manpower, and supervision from their side is also a bit difficult. But in spite of all these challenges, I think Bangladesh, with the help of the MFIs, are working very hard to alleviate poverty, to ensure inclusion of the excluded people, and to ensure the protection of rights of the included people. Thank you very much.
Thank you very much, Abdul. Very interesting Obviously, there's a lot of empowerment that goes with the capacity building. Maybe I'll just ask one question. I'm fascinated that you're focusing on farmers. Actually, I think that's very important because, you know, agriculture really is the way that people can change their lives. If you think that the majority of poor people actually derive their livelihood from agriculture. How does capacity building change the life? Take an example of a farmer. How does the capacity building that you do transform the existence of a farmer or, you know, a farming family, for example?
Thank you. I think we put serious emphasis on capacity building of our partner organizations and also the farmers, especially in the rural areas. In fact, we are trying to attack poverty from a holistic approach. It is a multidimensional problem. So we want to address this from multidimensional solutions. We want to address their health, education, sanitation, in addition to the credit problems. For example, we want to make sure that the farmers are able to send their children to schools. We want to make sure that the family members' health is taken care of. We want to train their children for skill development training for getting jobs. We want to train them to use innovative technologies in agriculture and for farm production, non-farm activities, in order to ensure that in case of any natural disaster, they can face these disasters, they can train their children, they have good face natural calamities. So in this way, I think we are trying to build capacity of the farmers and capacity of the partner organizations, which are so important because they are the people working at the grassroots level. We train people from the POs, partner organizations, and they train the beneficiaries at the field level, the farmers and all other beneficiaries.
Brilliant. So to the floor, I think what is clear from this session, at least for me, is that financial inclusion is obviously an idea whose time is now. And for me, it's exciting that, you know, many countries are working together to actually make it a reality. I don't know if we have any questions from the floor, and actually whether we have time for questions from the floor, but it will be okay. Larry says we don't have any questions from the floor. So at this point, I will just thank the members of this distinguished panel once again, and I'll ask all of you to give them a round of applause.
I'd like to invite Abdul, Karim to come up, and if you have your commitment with you there. We've had the example of the My Declaration and My Commitments, and PKSF is one of the ones that has made a commitment. Is he's okay?
I have not mentioned about Maya commitment because we are already committed to Maya, but our central bank is doing the necessary things. But I have the pleasure this evening to inform that our commitment to take specific, measurable and time-bound action to help 100 million families lift themselves out of severe poverty and thereby make a major step forward in ending severe poverty entirely. This is our commitment, and we know that a goal means little without a concerted effort to honestly and accurately measure progress made towards the goal, and therefore we commit to measuring our progress toward our goals through a consistent and reliable system. We also know that movement out of severe poverty will require dedicated efforts to support those yearning out of poverty, and will commit to developing and implementing products and services that facilitate this type of movement. Number one, PKSF will implement result-based monitoring system, we call it RBM system, for all its microcredit programs to monitor the extent of employment generation, poverty reduction, and asset creation from the efforts of its partner organizations. Number two, PKSF will adopt True Lift assessment tool with its RBM system to guide efforts in 2014 for consolidating and strengthening efforts to assess outcome of poverty reduction programs of its partner organizations. We are also pleased to announce that PKSF has planned to provide healthcare services to 1.13 million poor people through its 43 partner organizations in 2014. I commit all this on behalf of PKSF and our partner organizations.
Thank you very much for that commitment. And I appreciate the example that PKSF set, and also what we can learn from the Maya Declaration and how that has promoted a movement among the regulators and the policymakers. It's now time for workshops, and so the workshops, you'll see a schedule for them in your detailed agenda. The workshops follow different tracks. So if you look on page 9, it describes the tracks, and there are little icons for each track. So partnerships targeting the vulnerable is one track, partnerships evolving in a digital age, partnerships bridging sectors, so health, education, housing, together with finance, partnerships building a national ecosystem, topics that have been discussed here, and then partnerships expanding market inclusion, how we include value chains and get people into national markets. So you'll see the workshops that are coming up in different locations in the detailed agenda here. To get to the workshops, you go back through the walkway here and then into the main building there, up 2 flights of stairs. There's the exhibit area, and then around that area is where the workshop rooms are that you will find. So, you have that?
For those of you who need translation, there are only 3 rooms that has translation, the plenary here and room 11 and 12. So we're sorry if you want to go to another room. We speak English. So.
For the Bangladesh contingent here, and we have a very large contingent from Bangladesh, so about 100 people from that country, so great to have all of you here. And this group will be meeting together tomorrow morning at 8 a.m. in Plenary Hall E. So that's in this side of the facility. Plenary Hall E, 8 a.m. tomorrow. We want to gather the whole Bangladesh contingent together here. Thank you.
And then just one small announcement. Those who are speaking for the regional network session, there will be a short briefing here just for 10 minutes. Those who are speakers for the regional network separate session.
Are happening now. If you want to go to a guided discussion on partnerships, there's one for that. There's also a guided discussion you to discuss together what we can do as an industry around these topics. What are your recommendations for us? So you're welcome to participate in one on partnerships that Nick Bluff is leading, or one on national. The workshops is always more in very.
there.